All right, I'm just gonna do I think it's a really quick video, but I thought I'd just share a video on how I trade, and things I look for, how I make my decisions, and some of the things that I do, which is I guess quite contrary to what most other people do, because I watch a lot of trading videos on YouTube. I mean, after all, I did learn a lot about trading through uh, watching people on YouTube. Um, and 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 some things that I've learnt from other traders as well. But there's a reason why I have the view app sometimes, the moving average, the 20 period moving average, and then these color lines. I mean, today, for instance, now I didn't trade square, but I could have. And as you can see, we had a nice rejection on this level. Um, anyway, but what's really important, and I sometimes forget and I ignore it, um, is these channels. These channels are the things that make my trading decisions more than anything, and these dotted trend lines. I mean, they're not so much trend lines because they don't, so they go through points, and but they tell me something about what's going on. So my own way of trading is I use price action. Notice I don't have any volume bars on my chart. Or I don't use the volume indicator. I used to be a big advocate for volume. I read Anna Collins' book. I read a lot of books on volume, but I actually realized that it doesn't actually help you make trading decisions. And the way I kind of decide on how I make a decision is more to do with the price and how the price is moving in relation to two people, the bears and the bulls. All right, so you can call me a trend trader in the sense that I trade following the trend, or I trade counter to a trend, and I basically make my decisions based on that. When I started trading, I was trying my best to find ways to take trades off VWAP and trades off, you know, trades returning to VWAP, um, trades off the moving average. I tried everything, and nothing seemed to work, and I could not understand um, essentially what was going on. And so therefore, I get into a trade here. I would be scared once the thing had gotten here, I'd get out. Or let's say I saw a red candle, I'd get out of fear. Um, I guess risk was the big problem as a beginner. That's the first thing you look at. Then I discovered this whole idea of using supply and demand, and the idea of having price testing supply demand areas using basing candles to figure out those areas, which was cool and it worked out in some regards. But then I never could figure out what was an appropriate demand or supply zone. I mean, right here we have a zone that's been tested, but price has gone through it to this next level. So I started plotting more of these zones. I still use them from time to time, but I use them more as a guide to remind me, as opposed to using it as an area to take a trade, because sometimes I get phased out. So I'll give you an example. Today it happened, and I've got to be careful with this. I think I deleted it. I don't know. I plotted. Oh yeah, there we go. It's still there. So as you can see, the price cut through the zone. First rejected it here, and then cut through. Um, there's the argument is, oh, therefore there are no orders in the zone. I don't know if that's true. I have a different idea on what's happening, and so therefore I don't look at them as supply and demand zones. But I put them in my chart just to kind of give me an idea. So for instance, now we had a sell-off on Friday, and I over here I'm looking for where price may bounce, and as you can see, I charted this and the price has bounced here, and then you've got this big rise. So I use that to kind of give me an idea of what may happen the next morning, or what to look out for. So if you look at Roku, we had a similar setup as well. I charted another zone, but the price didn't actually touch the zone. At least I can't see it. So, but it gives me an idea of what may happen. The good one where price did actually touch it was Piton, and you can see it came in here, and we had this really nice rally. Um, so I make my decision, like I said, based on price action and trends. So the first thing I do is I try and see what's happening. Most people just plot a trend line at the bottom whenever they're in a downtrend. Sorry, trend line at the top whenever they're in a downtrend, or they plot a trend line at the bottom whenever they're in an uptrend. For me, it's important that I see both, and the information I get from both tell me a lot about where the bears and bulls see value in where they're trading, where they're buying, and where they're selling. And that information I find is critical on every single time frame. So this is the 1 hour time frame, which is generally the time frame I use to find setups. And if we go into the 4 hour time frame, you can see there's a big channel here, and then you can see the price is kind of tested the top, gone sideways, tested again, double topped, come back down to this level, tested its top, double topped, come back down, tested the bottom over here, right? So one could possibly, I think this channel is probably not drawn right. I'm just going to redraw. So notice we have a low here. So if we chart this like this, probably not a good channel. I mean, it could be valid. I'm going to take it out because I'm not using it because the price has already come out. Now, every so often I change the channels that I'm trading in because, like I said, as a price action trader, my focus is understanding what's going on with the spring. The price is like a spring. It stretches, contracts, stretches, contracts, stretches. So it's like the ball bouncing between two people. At some point, the person down here doesn't see value in trading here and buying here. And it makes a lot of sense. If you think about it, if you know that most people are buying when the price is low, why would you want to buy when it's expensive? You want to wait till the price comes back to when there's value to buy, to sell, to buy here. And the thing I think most trading gurus miss, what they miss is they forget that the market is I don't want to say a fight, but it's two bunches of people trying to agree on the price on an asset. So they both agree the price is too low here, and they both agree the price is too high here, and that's what causes the movements, supply and demand, the imbalances. So why would me being a bull think the price is good here when most of the participants think the price is not good here? They think it's too high and therefore it drops. And so therefore, those are the things I look for on a daily basis. If I think the price is too low here because we're in an uptrend, and I notice as we go up, we're seeing more value as we go up because the price is also going up on both sides. And that's something to keep note of. And if I notice that, the price here, when we pushed, we couldn't push the price here because participants felt this was a better place to, the buyers could not push the price any higher because they felt this was the highest value they would go, or even the sellers. So of course we have reversals, and that's what causes these double tops or double bottoms. In fact, we have a range here. And that understanding is how I make decisions when I trade. So as I'm trading here, I'm like, okay, we've come here. We've proven that the price is indeed low by showing this trend, especially when we have an overshoot. Overshoots I love the most because you may say it's a breakout, but you're going into more value. So all the people who bought over here, you're now coming back to them, and they're now thinking, oh my God, there is even more value. And let's look at it from not just the bull's perspective. Let's look at it from the bear's perspective. Let's say you sold all this, and you sold here, and the price came out here, and you're in pain. And the moment the price came here, but then even overshot, you're going to buy aggressively. And as a result, you have this spike. So I look at the sentiment, and I'm trying to understand every single bar as it's printing. The moving average for me is really important, not because I'm trying to take a trade from there or whatever. I'm interested in the average price, because if, say, the price is below the average price, then a buyer sees value. But the moment the price closes above the average price, then it shows me that we have strength as far as the buyers are concerned. Chances are the price is going to go higher. But here this didn't actually happen in this particular way. But if you notice, the price is coming closer and closer, and at some point I'm thinking we're going to get to a point of exhaustion. And that is what gives me conviction to having a rally on a day like this. As a result, these channels are important to me. Again, supply and demand is important as well, because I'm looking at basing areas where we have been in agreement of price, and that's what this area is, and coming back into that area where we agreed that this was an area of agreement. Therefore, chances are, since we broke out of here, we probably will break out one more time. And so you can see why these patterns happen the way they do. You have a flag and then a pole and a flag. And one could then now see, okay, fair enough, we've shown that there's value here. Let's see what happens over here. If we do break out, we've proven that there are more participants who have come into the trade. So this is the second leg, first leg, second leg. And I count legs when I trade because I'm interested in value. And therefore, if I think this is a place of value and we've proven that it's a place of value, there's support or zone or demand, if you want to call it. So an understanding of how the price is moving, what the price is doing, the reaction to these prices as they're rising up, then we get to an area of agreement that this price could be too high, but then seeing the work the bears are doing. If I notice that we don't push too low, then it tells me there is more up. But you can always tell just from screen time, the amount of buying gone in here will obviously intimidate anyone over here to sell. Why? Well, think about it. First of all, this is the area, you're in the middle of the range. This is the area of agreement for sellers. Most of the sellers are here. A lot of them aren't here. So I think this is just profit taking for people who sold or bought over here, and who probably bought a bit more over here and are selling over here. And so the price is getting choppy because people are selling or taking profits. But at least in agreement, this is not exactly the area, which is why I get it. Looking over here, I don't expect this to go any further down. In fact, I'm looking to buy because now I'm seeing reasons to get more value. I think an understanding of price action has changed the way I see the markets. Channels make a big difference, and therefore understanding that, really, I see the bars as a representation of what people are doing. And an understanding of what human behavior is about will help you make decisions. Which is why I have a problem whenever I hear a trader tell me, I'm not going to go long in here, I should have gone long here. Why? Because my risk is smaller. Yeah, but you can say that in hindsight. Your risk is actually smaller, but your probability is lower too. Here, your probability is a lot higher than it was when it was over here. So this is actually a great place to get in. Of course, your risk is going to be lower, but you're trading it for higher probability because you're going to get this. Especially this. This will give you a high probability that the price will come all the way back up here. And even if it pulls back, because of all this buying, people who miss the trade, the trapped buyers, will buy pullbacks. Like those who didn't buy here are now buying here, and they're making profits when they get back up here. And this is why you have these long wicks. Let's go back. Look at this long, what am I looking at? Here we go. So those who missed here, they bought here, and now they're selling here, which is why it's gone all the way up here and it's come back down. So you have profit taken here. Good understanding of what is happening will help you make better trade decisions. All right. Like I said, I use a moving average to get a sense of what is happening with the average price. I don't want to be buying far away from the average price. I want to buy close to the average price. I don't want to be shorting far away from the average price. I want to short close to the average price. The VWAP tells me what kind of trend we are in. If it's slanting up, I know we are in a very, very strong trend. If it's flat, then I know that there's a lot of agreement within the market. That's just it, really. I don't use it as far as, oh, I've got to buy at the VWAP or anything like that. I'm sure some institutions do that. So for instance, now I'll give you a good one. Look at Roku and how the price reacted around the VWAP. So okay, so on a trend day, it was so far away from the VWAP. On a day like today, it pulled back to the VWAP and just hugged the VWAP. Right? We're just going around the VWAP. So up and down, up and down, up and down. Yes, from a distance, it looks like we're trending down. But really, in the training range, we're just going around the VWAP. Maybe edging down a bit. But this just told me that the moment it got flat here, nobody was interested. They all agreed that this was the price, and this is just computers reading. Oh, why do I have these lines? Again, it just tells me how much effort is being put in to push the price to these levels. So the trend in here leads to reversals. 3 pushes usually leads to a reversal. So whenever I see a push down, it tells me how much effort the bears have put. They pull back, then they pushed it down again. They pull back. They tried, they couldn't do it. They tried 1/3 time. But then bulls, sorry, they tried here 1, 2, and they couldn't do it. And the bulls took over. Pushed it 3 times, and then they gave up. Pushed, pushed, pushed. So each time they push, it tells you how much strength they're putting into the push. The stronger the push, the further they go down. However, they can only push so often. And usually, this is on the 4-hour chart. This push, obviously, is an earnings push, but it's within the trend. So that's why I don't really care about earnings or news. In fact, I don't trade news at all. I just look at what's happening, and this is what moves the price. Support and resistance. News is just a catalyst to move it in that direction, because people know exactly where they want the price to go. They know where the value is. So I just follow that. Unfortunately, I make some bad decisions. As you can see, I made a bad loss because I never seem to want to take my profits in time. For instance, I'll get in on a good trade. I may take this short. Where am I getting here? I don't have the patience to wait for it to come back down and I get out for a loss. But really, I need to just kind of wait for the setup to present itself and take it. That is trading, really. It's just a good study of human behavior. Oh yeah, this is actually the thesis I have for Roku. I think we are going back to the 200s, but I may be wrong because I think we're going to test this first and then test this level. We've pushed up 3 times and we overshot, and now the bears are pushing the price down. So this is essentially me looking at the higher time frame to get a sense of where price is going on the lower time frame. So as you can see, we're pushing down, and then if we put this on, say the 30 minute, we've pushed down. I don't know why it's doing this. We've pushed down anyway, and now we're retracing or correcting, and then we push down even further because that's what we're trying to do. All right, I thought I'd just share that, and if anyone has any questions, message me.